everybody, it's Gui Costin, founder and CEO of Dakota. I am joined by Tim Dolan, my longtime colleague, and welcome to Rainmaker Live, our latest edition. So just as a bit of background, we founded our firm in 2006, and we have been third-party marketers, fundraisers for investment firms. We work with about 6 different investment firms across 4 long-only strategies, private credit, and private equity. So we have a 7-person sales team. And the reason we started doing Rainmaker a number of years ago and training our industry sales professionals is there's no training, right? There's nothing, Tim, out there. There's not a book that you can read. It's very opaque. You're generally just learning from a senior marketer, right? The reason we did this is because when I started hiring salespeople in 2011, we had a problem, right? And it was classic, you're going to just watch what I do, read my mind, and the whole thing. And that's not a great strategy. So what we started to do is we started to put down on a paper exactly how we do what we do within our role as a salesperson. And that has led to Rainmaker training, and now we've trained over thousands and thousands of individual investment salespeople. And I would say the key thing, Tim, as we're going to kind of go through this, is yes, this is sales training, but really what this is all about is leverage. So whether you're new to the industry today or whether you're a senior sales professional, right? You know how to sell, you have great instincts, probably great relationships, the whole thing. What we're here to do, and our whole program, is all about just pointing out where we believe there are what we call key points of leverage in the sales process. And we've had a lot of senior people on these calls that have said, hey, Guy, you know what, I just decided to do it just to get a little refresher, see what maybe you guys have, and then we get really good feedback, right? We've given a lot of thought to this. Tim, you know, we talk about we have a hardcore approach to sales. You just want to talk a little about that because we really do what we consider to be the tough things because there's no easy button in sales, right, Tim?
Absolutely, and we'll get through a lot of the key points, but I mean, one of the main things that I learned early on in 2011 and 12 was, right, being addicted to setting up meetings, right? As right out of college, that was the one thing that I could control is the number of asks. And then over time, as you build relationships, right, having tools in place to make sure that, right, there's scale and my time was leverageable across a whole facet.
That's great. We're going to get to each one of these points, but that's probably one of my favorite topics, and we're kind of going a little off topic here as we're starting, but I think it's an important point, is that nothing happens in fundraising until a meeting is set up.
Yep.
Right? It just, listen, unless if your phone rings, you're just in a very lucky spot. Unfortunately, the large majority of us, the phone never rings. We have to make outbound emails and calls to schedule meetings. And I consider that to be very pedestrian, right? That's very pedestrian, but you have to accept it, right? And what do we talk about being a professional?
Meeting setter upper.
Right.
Yep.
That's the line that we use. And the more you commit to that and the more you're doing it on a regular basis, the better off. So, but getting back to the program that we're going to go through today, you know, Tim, I really think when you think of sales training and coaching, it really is these leverage points is what we're going to point out. And these are things that we've really studied and they really work because there's only so many things a salesperson really has control over, right? I mean,
exactly. I mean, right, who we call on, what we say, how we follow up, and we'll get through all of that in full detail. But as salespeople, I have no control over the performance of a fund or a strategy, right? I have to react to how the performance of a strategy does, right? So at the end of the day, we got to focus, right? We always talk about focus on what you can control. Good segue right there, right? And it's the things we'll touch on, right? Having the right set of buyers for your strategy specifically, where you're traveling, the cities you're reaching out to, all the things, again, we'll touch on, but it goes back to focusing on what you can control.
There's no doubt the whole game plan here is our whole business, Dakota, is built on this basic concept, followed up by this concept, just focusing on what matters most. So if you look at the key points of leverage that we're going to walk through today, that a salesperson can take away from today, it's always focusing on what matters most. That is the key, right? And we've seen it time and time again because sales is hard. It's a very emotional. Rejection is very, very emotional. 9-month, 18-month, 24 months, 36-month sales cycles stink. You know what I mean? It's painful. But if you're going to be in this business, you have to commit to that. And then you have to commit to doing the things that lead up to winning the business. And that's what we're going to go with. But it does start with this concept. And that's why we always think about it. Any element of this is what, if you couldn't do anything else, what would you do? Right? So let's get into it. And Tim, this really, I said embrace the challenges. I was going to say it in a different way as college coaches like to say it, but you really do have to embrace the sort of the emotional sort of washing machine that we're all in when we send 25 emails and get 0 meetings booked, right? And how do you send those next 25, right, Tim? And that's what I mean about embrace the challenges. That is a challenge for anyone unless you're not human, right?
Yeah, exactly.
I mean, there's no pill you can take just to forget about the emotion. But as soon as you start to accept it, I think it's better off. And the reason I spend a lot of time on this is because I want to make sure that as you're watching this, we have a ton of compassion for that part of sales. Right, and so we've tried to design, leverage points, as we've talked about, key leverage points to sort of get over those emotional hurdles. And like I said, it's a little bit of group therapy, but it really is putting those things in place so you have more positive, outcomes on a daily basis versus just always, sitting in a 36-month sales cycle is difficult. So, with that, Tim, why don't you just kick it off and define what we mean by know who to call on?
Yeah, absolutely, right. So kind of the Dakota way of doing things, know who to call on, know what to say, have a killer follow-up system. So this is number one, right? And that is, depending on your investment strategy, your vehicle, your asset class, right? It's finding that subset of buyers that buys what you sell, or what we say internally, we call on people that buy apples because we sell apples, right? Convincing an orange buyer to buy an apple, right? That's 2 sales. That's not a good use of time.
And we learned this very early on in the process is it's creating a sales plan to define your TAM. And we're going to talk a lot about this, but it's really defining where you're going to spend your time.
Yeah.
And even though it's nice to call on Harvard, right? We've made a career calling on everybody, but we've made a career selling to RIAs. One of the hardest channels to sell to. You're killing squirrels, but defining, right?
Yeah.
Because listen, at the end of the day, depending upon where your fund is in its life cycle, if it's a startup mutual fund, RIAs. If it's a mutual fund that has a 3-year track record, you're going to add in banks and broker dealers. If it's a separate account, all of those. Then you could bring in the more institutional buyers. If you're an LP, Fund 1, it might end up being a little bit more RIAs, multifamily offices to start. You know what I mean? And then, but if you're on Fund 3, Fund 4, maybe now you're talking to consultants. You've cleared a lot of hurdles. But it's really important because all you have is your time to clearly define in your sales plan where you're going to spend time. So you want to talk a little more about that, Tim?
And I think importantly, right, a lot of this program is managing expectations, right? Managing to a sales leader, managing to a portfolio manager, a CEO, right? Because we've all gotten the phone call from a PM or a CEO. It's like, hey, my buddy, why haven't you called him? It's like, well, the sales plan, if we actually focus on the sales plan, what matters most, nice guy, but we need to be focusing on these key accounts.
Could you talk just a little bit more about the importance of setting expectations and talk about career longevity, talk about harmony in your day-to-day?
I liken the sales plan, setting expectations, no different than an investment process, right? So if you're sitting across the table from an allocator, they want to know how you invest, right? Your process, your philosophy, your team, buying and selling a security, right? Sales is no different. Creating the sales plan, having sales structure, right? Managing those expectations, because it will take time, right? It's 9 months to 6 years in some instances, right? So we have to make sure that we're managing up to whoever it is, right? And pointing back to, here's the sales plan, here's the strategy we have, here's the track record, here's where we can go and actually win, and focusing on that, right? So it's defining that sales process that you can point back to over time.
Yeah, let's talk about what I call the straitjacket, is why I do a sales plan. Like, you need to put the discipline in place for yourself. That's what I did. And Tim knows it as well as anybody. You want to tell the lacrosse helmet story just to kind of go to show you how I don't mess around with this, because, as I said, white space is the devil on current status and next step. And so we'll get to this later, but talk a little about that.
We have in our CRM scorecards, and the top buyer of mutual funds is JP Morgan, right? And we have to know the analyst, when the last time we met with them, current status, next steps, and the key contact, right? And when you do that weekly, and there's white space, meaning we have no update, no next step, no status, it gets a little uncomfortable, right? So when you put that piece of paper down and it's uncomfortable, strap on a helmet and just know you're going to get asked the hard questions. But it does force that discipline, because after a while, it is uncomfortable, and you want to have answers for it, and it forces you to go out and get those answers.
And you're going to hear a lot about this today. And what we talk about all the time are triggering sales actions, okay? This is when we're going to talk about leverage and 10xing your productivity. It's all about creating infrastructure to create sales actions where you don't have a choice, because you can't sit down in front of your team with a bunch of blanks after a month when you've been assigned a handful of accounts to call on and reach out to. So here, I just want to go through the sales plan quickly. Importantly, we will be sending after this presentation, we have a 16-page workbook that walks through all of these elements. And the reason you want to create a sales plan is, number one, you want to define your TAM, okay? Really important to create your TAM. And then what you want to be able to do is you have to be able to, after you create your TAM and where you're going to focus your time and energy, you have to sit down and put what success looks like, okay? You have to put down what success looks like. And you have to be able to sit down with your boss. Now, some people have said, I'm not really set up that way, but ideally you sit down with your boss and say, hey, here's my sales plan, okay? I want you and I to be in sync on this. And this is setting expectations. I'm just going to tell you, CEOs and portfolio managers, as we all know on this call, have an expectation. They have an expectation of up here, where you should be raising money. Should we raise $1 billion this year? And then down here is kind of the reality, right? Or down somewhere in the, is the reality. We think it's here, it's somewhere maybe in the middle. It's really, really important to get buy-in from your boss of where you're going to be spending your time and what success looks like. I'm just going to tell you, I believe everybody has 18 months to make it happen, if you will. That's the hidden number. With a sales plan, with a regularly scheduled update against the plan, so progress against the plan, vital. This is huge leverage because it's forcing you to communicate with your boss. And I'm going to tell you right now, I've never seen a situation where when the boss hasn't heard from you, doesn't know what you're doing, they think really bad things. They think you're doing literally nothing. So it's just important to have that discipline. Say, hey, look, I want to update you each week or every other week on where we stand against the plan. Okay, so that's the plan. So Tim, nobody knows city scheduling better than you. Now, how do you execute the sales plan, right? You have these targets that you're going to call on, and you kind of have a 90-day, 6-month, 9-month, 1-year plan of attack. What do you do to keep the discipline, right? To make sure that you have momentum and purpose. Keyword purpose, and this is again leverage. This is a leverage point. You need purpose every single time you get up in the morning. Talk about city scheduling.
So it's a couple things. It's data management and the ability of scale, right? So you have the sales plan, you've created your TAM. Let's just say, for instance, it's the RA channel. You're the intermediary salesperson. That's close to 3,000 accounts. That's overwhelming for one person, let alone 7 people, right? So what city scheduling does, and again, it's probably elementary for a handful of folks, but for others, it's chunking those channels and pools of capital into bite sizes that are manageable to go attack and reach out to.
And talk about so some of you may know just by being on this call that we are the creator of a institutional and intermediary database called Dakota Marketplace, which is a fully functioning CRM, if you will. I mean, not a CRM, but a database. It's all built around metro areas, which facilitates city scheduling. So talk about why the city scheduling in terms of chunking, why it's so important.
And so, right, you think about, you wake up in the morning, right, 3,000 accounts, that's overwhelming. Where do I go, right? So how we use the database and have used what we've built over the past 16 years is you go to the city of Chicago, you go to the RAs, and you start reaching out to those pools of capital and the dedicated analyst with specific call to action, which we'll get into. Can you meet at 9, 11, 1, 3, or 4:30? So we fill in those time slots. So you'll make, in Chicago, 80 asks, hopefully get 5 meetings, right? But what that forces...
20 to 25 a day.
Exactly.
We always say that's the discipline, send 20 to 25 a day. That means you can cover the RAs in Chicago in 3 or 4 days of asks.
Yep.
You're not going to get, obviously, the commitment, but they'll be seeing your brand, right, every single time, which is key, which sort of goes unnoticed. They see your brand via every email that you send.
And the nice thing about it is if you get 4 meetings, right, probably get on an airplane and go, but let's say you only get 1 or 2, you've covered 80 accounts. You're going to cover those same ones in 3 to 4 months because you continue to rotate through these cities. But what's nice now is you can flip those meetings to a conference call or Zoom, right? And again, you now have your brand, as Gui said, in front of these folks every 3 months, and you continuously go back in front of them. So,
and what's our recommendation in terms of number of cities on the calendar at any given time?
Each salesperson at Dakota has 5 cities on the calendar at any given point in time. Right, so
you always have purpose. We're always scheduling, and this has never, ever ended. We actually do it on the database side and the software, the exact same thing. It gives a salesperson purpose. If not, you can get lost, right? It all happens. It makes you very focused on a daily basis.
Yeah, so Gui, one of the questions I get through Dakota Cocktails and other events is, am I reaching out for myself as a salesperson or the PM? And then the next question is, what if my PM won't travel?
If your PM won't travel, listen, I think at the end of the day, we can carry the bag on initial meetings better than a PM, right? Because you can say things that you can't say in front of a PM. If they like the strategy and your email's tight. Now, let's just go through, because in the workbook, it's going to detail out the email. So it goes like this. We strongly, strongly recommend this. Subject line, meeting request, October 25th, 3 p.m. And then you come up with 1 to 2 sentences max, and you really got to think through to pack the punch of what makes you different. It cannot be long. It's great to attach an attachment. The only risk you run is spam. So if you knew it wouldn't go into spam, absolutely put an attachment. Put all the germane facts of why someone would hit the bid to take a meeting. And then the last at the bottom is have a clear call to action. I prefer, can you meet October 25th at 3 p.m.? I see people put in 1 or 3. I've seen they list out a bunch of different meeting times. My personal recommendation is hit it hard with 1, then they can come back and say, I can't do 3, but I can do 2.
I think importantly is, and I see it a good amount, is, are you available the week of October 23rd? Maybe.
Yeah, that's not.
Yeah,
that's why you don't book. You're not getting meetings through your email. You're not being clear on who you are, what you do, and what the ask is. You know what I mean? What is the ask? The ask is, can you meet in your office at 3 o'clock on October 25th?
Exactly.
Right? We want to have a clear call to action. It'll all be in the workbook. So let's move on, Tim. So we covered everything in terms of sales plan, how you're going to go about implementing the sales plan and sending the email. There's additional detail within. So now you've set up your day of meetings in Cincinnati. Okay, great. Okay, you have your 5 meetings. Now the question is, how prepared are you to pitch your story, right? And there is an absolute scientific. It's a little art and science, but it is scientific. And Tim, I just want to kick off with, after you get through the niceties, okay, and some people can have some nuance here. But one thing that is not nuanced, if they don't know you, okay, is they don't know how they should be thinking, okay? They don't know like clearly what your product is, your firm, and they have all these questions in their mind to take this concept like this and bring it in. So this is what we call, cover the easy questions up front. There's 15 to 25. We listed out in the workbook. I want to talk about that just a little bit so we can, those first 2 minutes, what they're listening for, you don't want them asking all those easy questions throughout the hour that you're going to be together, because then you're missing where they can really get to the meat of the strategy.
Yeah, and the easy questions, right? Number of employees, AUM, year founded, where you're based, number on the investment team, right? That should take no more than 2 minutes. What do you do? What is your investment focus? Or what is the point of the meeting today? Right? And then we'll talk to you on it, centering the conversation. But the firm overview, philosophy and process, we've seen it many, many times with PMs. They go for 10 minutes. It's like, no, 2 minutes, move on to what matters.
Because it centers the conversation, right? Now they know what they should be listening for. Now they know what they're dealing with, right? Yeah. And if you do it right, you can come out with a lot of passion, right? Because you're excited about your company, you're excited about the different things that you have, and you can script it, right? So, and you can make it very exciting with passion, but also now they know what they should be listening for. Now they know if I say to you, hey, our firm's based in New York, Edgewood Management, founded in 1974. Alan Breed, the president, took over in 1994. All those partners joined in the late 1990s. 2 joined in 2006. You've had the same team together for 17 years. We manage $35 billion in a 22-stock large cap growth portfolio. We have mutual fund and separate accounts. And so if you just size it up just like that, now they know exactly, okay, they know the product vehicles, they know the AUM, they know the tenure, which we're checking every positive box you can possibly check. And now it's like when you get into it, they're like, okay, let's dig in. And when I say, Tim, what's the most important thing after you cover those?
Punch them in the nose.
Yeah.
Get into a conversation of what really matters and punch them in the nose.
Right. We always say, right, in the beginning, you want to really center the conversation and then get into a conversation. It can't be a monologue.
Yep.
That's the critical thing. It has to be some back and forth. My favorite quote that I received in 2005 from Keith Mitchell, who is a legendary presentation trainer. Short answer first. If you're a PM listening to this, it's even more important that you go short answer first, because you want that causes a conversation, right? If you go and answer the question for 10 minutes, well, you've just taken 1/6 of your entire moment, your time together. If it's an hour meeting, Tim, talk a little bit about that, about the short answer first, and just how important that leads to them having follow-up questions, which gets you into a conversation. And then as you start going back and forth, and I've literally seen PMs go for truly a straight hour, and the person they never take a breath, and the person never really learned what they wanted to learn about the strategy.
Yeah, important. And this is a lot of training for the PM and even for ourselves, is answering the question that they asked, number one, head on, but also what's important to them is more important than what's important to us, right? A lot of times we like to just touch on what we think is important, right? Because it's fun or it's exciting about our strategy, but at the end of the day, what matters to them, right? Because in the most part, they need to take this conversation and go retell it.
Right.
So if you're in there for an hour, they're going to remember 4 to 5 key points. So we got to make sure they cover those key points in the meeting and not go super deep on some bond or stock story.
So we're never selling to the end buyer. It's almost impossible, right? You're almost never selling to the end buyer, maybe unless you're in front of a public fund and it's a finals presentation. But for the most part, you're always selling to someone who has to sell to someone else, who has to sell to someone else. The art form of fundraising, the art form of giving a presentation is taking a complex story and making it simple.
Yep.
Right? And that's the skill set we all have to learn, is how can I take this complex story and make it very easy to understand? And it also goes along with questions. That's I'm getting into a conversation. It's Q&A, asking them, what does matter to you when you're evaluating a manager? What are the key things that really stand out that matter to you, which Tim just covered? Obviously, you're going to want to touch on your investment philosophy, process, risk controls, portfolio construction, longevity of the team, decision making, all that type of stuff. As you go through, but really putting it to them and going back and forth and having a conversation is really what means everything. So now, I get this a lot. This is my favorite, okay? And people say, hey, Gui, this is awesome. What do you do to follow up? What's your follow-up cadence? And I know this is counterintuitive, but I said there is no follow-up cadence. The follow-up does not happen after the meeting. The follow-up happens in the meeting. And Tim, you want to tell us, because it's really mandatory, and I've done this a lot, and I think my most favorite feedback is people do this, and they're saving so much time for themselves.
Yeah. So
key leverage point, by the way.
Yeah.
Key leverage point.
So as Gui touched on, the follow-up actually happens in the meeting. So when you round out the meeting and end it, right, assuming they actually invest in your asset class, because if not, that would have been a poor use of time. But assuming they do, right, it's asking the one question, right? Do you have a search, if it's long-only equity or fixed income, will you be doing a search in this asset class over the next 9 to 12 months?
Yeah, and can we be involved? So first question, as Tim just alluded to, first question is, hey, I don't want to assume anything, but before we get going, and it's a little bit more unusual, if you will, when you're dealing with more private strategies, does our strategy, can you see, or would you invest in our type of strategy in your clients' portfolios? If they say yes, you know what the follow-up is, right? Hey, okay. If they say no, then you know what the follow-up is. So you're getting the follow-up in the meeting. Now, if it's long in the equities, as Tim said, that's great. You guys do invest in large cap growth. Do you anticipate doing a search in the next 9 to 12 months? No. Okay, I know what the follow-up is. I'm going to keep you on our mailing list. I'll touch base when I come through from time to time, what have you. If the answer is yes, well, what are the things that we need to do? Do I need to get you in front of the PMs, other analysts, RFP? What are the questions? What are the different follow-ups that you want from us so we can more familiarize you with the story? If it's a private strategy and you do the same thing and you say, hey, is this a strategy you guys would ever see investing in your portfolio? If they say no, you know what the follow-up is, right? But remember, you spend an hour together and you don't want to waste a lot of time. If they say yes, I do see that, then you might say, well, can you make the 12/31 close of 23 or 3/31 of 24, right? So, but you have to ask them, because if they're going to say no, it's just we need 3 board meetings, we can't do it, done. Sorry, now I know what the follow-up is. Fund 3, we'll be back to you, right? And that's, when you talk about follow-up, and I'd say leverage point, my gosh, this is, I mean, if I had to kind of pick one, if you're actually, once you've done everything else, getting this on the table and having the discipline to do it. I know it's not easy, but believe it or not, once you do it, it becomes a lot easier.
It's simple. We appreciate you taking the time, hour of your day, so we don't waste your time and continue to send you information that truly is not a fit. Do you believe we would actually fit in your portfolio?
Right.
Yes or no? If yes, is there going to be a search over the next 12 months?
Got it. All right. So we covered the reason we did the master messenger, know what to say, is we wanted to have some fun, because really great communication is you're bringing that story to life. You're telling a story. You're not just regurgitating facts and figures. You're telling a story, and that's the goal. Telling a story people can remember. People remember stories. They don't remember numbers as much. Let me just close, okay, on this topic with Alan Breed, president of Edgewood. Went to work for him in 2006. We still work for him today. I said, Alan, can you, now that I've joined, can you tell me about your strategy? Like, just tell me. He goes, Gui, I'll make it simple for you. So what's that? He goes, if you could pick one S&P 500 company in the S&P 500 to be your family business, like Visa, right? What would it be? And so I sat back and thought, right, okay. And he goes, you know what you're going to do? You're going to think, okay, if I had my choice, I'm going to want to pick a company that is a monopoly, generates tons of cash, has little or no debt, has an awesome management team, has high and increasing margins, and you start to go through those characteristics. He goes, we want to own 22 of those. I was like, oh, and growing 20% plus a year, right, combined in the portfolio. So the point is, it's such an easy story, right? Yeah, you just want to be, I mean, what that translates to is a super high quality company that has a big moat around it, has no debt, is growing quickly, high and increasing margins, which is a vital test of the health of a growing business. So I'll close with that, but that's an example of storytelling. I tell that to anybody we meet with as it relates to Edgewood. I tell that story, and it's just so easy to remember. So, all right, on to the third and final section. This is leverage point after leverage point after leverage point, okay? Tim, you just want to tell the group what when you see this, what you think of?
I think of time management, and I think of time flies by, right? You do the day of meetings in Chicago, and the next thing you know, it was in March and it's September. You're like, wow, okay, I haven't met with that pool of capital. I haven't reached back out to the people I didn't meet with. I actually didn't send the follow-up because I was busy focused on the next trip, right? This is all just kind of containing the salesperson mentality and just checking ourselves to make sure that we're actually doing the key thing, which is follow-up.
So follow-up, as I said, happens in the meeting, not after the meeting. Now, does that mean you don't send an email? Of course you do. You send a thank you. There might be some follow-up materials you have to follow up with. Of course, you have all that. But when we're really talking about follow-up, the time saver is in the meeting. Now, after the meeting, right, the key point is there's one piece of technology that gives salespeople maximum leverage if it's just used in the simplest way. And that's, of course, a CRM. Now, a lot of people blame CRMs because they're not configured properly. The data is mostly stale in CRMs, as we all know, globally, every company. But a CRM, if used properly in a very simple way, can be a complete game changer to your efficiency and then, of course, to your effectiveness. So, and what I mean by leveraging a CRM is, number one, you have to get your past meetings scheduled into your CRM. Tim, talk about what we did to even make this mandatory so no one could, you had no choice, Slack, and what we did to make sure it just happened. Because what we wanted to be able to do, I call them bars of gold, right? Is that every meeting that you do is a bar of gold that goes into the CRM, so you can have rapid follow-up 90 days after, so you can see where you stand. And what I call it then is not so much follow-up as it's going to trigger sales action. So talk about entering meetings in the database.
Yeah, so we created an application within our Slack. So we put the meeting in Slack. Our entire company sees it, but it immediately goes into our Salesforce CRM. Without that tool anyway, right? Going into Salesforce or HubSpot or whatever and just putting that event in maybe takes 35 seconds. But that 35 seconds is crucial, right, to track all of your activity. Because again, time flies, we will forget, right?
Your brain can only handle so much information.
Yeah.
And you need to be able to review things on a minute-by-minute basis, a daily basis, and that's through past activity reports. You want to see where you've been.
And I think also going back to managing expectation in the sales plan, creating the sales plan is crucial, right? Then reporting on the sales plan, as Guy touched on, having a regular scheduled call with your partners and colleagues within your company, right? Hey, I said we're going to cover the RAAs. In the third quarter, we did 150 meetings against the RAAs. That you can report if you're logging your activity, and then you have the pipeline as well. But if you're not logging activity, it's like, hey, did a couple meetings, and this guy's interested, and yeah, it's been great, right?
Yeah, it's a gut check, right? It's a gut check every day to really test yourself if you're really doing what you said you were going to be doing. Because when you look at it, you're going to be like, wow, either I've done a lot, or boy, I should be doing more. But then it's also over the course of time, as you build your body of work. So as you get 90 days, 180 days, 270, a full year, you're going to end up having this long list of calls and meetings that you've done. And by being able to review it on a daily basis, it's going to trigger you to take certain actions, right? And you don't have to think. It eliminates the need to think. You can just go in and act based upon this report. It's kind of what I believe one of the most effective tools. So all you have to do is enter the meetings that you've scheduled and create a past activity report. So next is what Tim alluded to in the beginning of this program is pipeline reports. And they're really in the form of two things. One, they're your true pipeline, right? So the opportunity, the amount of the opportunity, the name, the channel, the date, the close date, the amount, et cetera, and then the contact info. And those pipeline reports, that's what you sit down and share with your boss. So they're very easy to create, but they also create huge. You want to talk about just looking at a pipeline report from a stage perspective, and how that really causes you to take action?
Yeah, so we have specific stages which we'll follow up in the booklet, right? But again, going back to time flies, you could be in the due diligence stage with someone, it's been 6 months, right? You've done the PM calls, they've come on site, and if you're not looking at your pipeline on a regular cadence, right, like, whoa, okay, it's been a while since I've spoke to them, right? So we review pipelines every single day as on the investment sales team check-in, but we go extremely deep every single Monday on our 9 a.m. check-in, where every salesperson by all 7 products is called out, where do we stand, right? When's the last time you met with them? It's like, oh, I need to follow up here.
Right, and we put in our Salesforce 2 custom text boxes. One is current status, and the other one is next step, and that's right in the pipeline report. So let's say current status could be they can't invest until we're at 100 million. Well, if you put that in there and you're reviewing it, all of a sudden, boom, you hit 100 million, that triggers you to take action, right? Even beyond the follow-up I was saying. The follow-up was, when you're past 100 million, come see me. Unless you're creating reports of all those people that told you that, that'll be sitting right in front of you. So if you're reviewing on a daily basis, weekly basis, it'll cause you to take actions. And anything that was covered in the meeting that would be an objection or you needed to overcome should go in your current status. And then the next step is, once we hit 100 million, follow up, or just what I like to do is when you're hitting those thresholds is we just email them with some very positive news about the portfolio, a company, or what have you. Oh, and by the way, we just crossed the $100 million mark.
And this is also the opportunity, right? Because as we all know, you bring a PM into the meeting, they do one meeting, and $1 billion should just show up, right? This is where we can track through the current status and the next steps, the truth behind the opportunity, that it does take time. Right, so reviewing this with your team, to the PM, to C-suite, and reporting back to them, hey, this is what reality is. Here's what they need. Here are the expectations, right? So it allows, as salespeople, right, to focus on that messaging and following up, but also managing up for a real opportunity.
Yep, so past activity reports, pipeline reports. And so Tim, as we recap, we're going to go through, why don't we talk a little bit about how we're structured as a sales organization that has worked really, really well for us. Talk about the Monday and then the successive meetings, the check-ins. We call them check-ins, and the check-ins are very structured.
Yep. So we, as I alluded to, so every single Monday we meet as an investment sales team at 9 a.m. for 1 hour. And within that, we're covering just good news from the week prior. We always like to start a meeting, just good news, get us off on the good foot. And then we go through travel. So each salesperson goes through the 5 cities that they're scheduling for, where PMs are going to be so everyone is on the same page. And then we go through each individual pipeline. Importantly, right, we have the ability, if something does advance, it's like, hey, you had a conversation last week, what do you think it was, right? So we use that team approach. And then at the end, it's just where are we focusing our time that week, right? If there's anything of priority, if we do have PM going somewhere and we've got last minute time slots. So it really centers our entire team on a weekly basis that Monday. And then Tuesday through Friday, it's every day from 8 a.m. to 8:30, no matter if we are on the road, right? Even on the West Coast, we're up at 5 a.m. and we're checking.
These check-ins are game changers. So when you want to talk about leverage, okay? If you're one salesperson, it's hard to check in with yourself, you know what I mean? But if you have a team, okay, another key leverage point is communication. Because you don't know during that prior day what your teammates have had conversations about, sharing good news, sharing how you ever responded to a question, what people were asking, whatever it might be. Those check-ins on a daily basis, 15 minutes generally,
Yep.
or you can give yourself a little flexibility to go to half an hour. Those check-ins from Tuesday through Friday allow you to tap in what we call the collective knowledge of the group.
Yeah. And a real-time example of this morning, Dan was with one of our portfolio managers yesterday, and they had one of the more interesting trading activities within the quarter, quite unique. And he was with the PM yesterday and recapped that with our investment sales team this morning. And I kid you not, I got a question about it this morning, right? So tapping in the collective knowledge of the team, having that check-in, having Dan go through the story of that trading activity, I was fully prepared for that conversation. So again, having those daily check-ins from 8 to 8:30, and sometimes they're quick, right? It's, hey, we're doing this, boom, boom, boom. All right, everyone safe travels.
Well, the key is to tap in to use your teammates to your advantage. Tap into the collective knowledge of the group, right? That's a huge leverage point. And I can't tell you, just most people I hear, they'll do check-ins every other week. It's just basically leverage your teammates. So Tim, just to recap, okay, as we mentioned, key, know who to call on. We're not going to go through the whole thing, but the key takeaways here are create the sales plan, make sure you know what your TAM is, and stay committed to the city scheduling. Master Messenger, it's all about your opening, then the body, and then your closing and asking the tough questions. Need to be prepared. All of that information's in the workbook. And then as we just went through, the killer follow-up system is really leveraging a CRM so you can get maximum leverage and not have to remember everything in your brain, but also so it'll trigger sales action. So Tim, can't thank you enough for joining us.
Thank you.
Tim's been an unbelievable fundraiser with us since 2011, and we're going to run these on a monthly basis. And listen, if you want me to come and present at a conference, if you want me to present to your sales team, which I've done before, I would love to do it. Just email me at Gui@dakotalive.com. And with that, we'll conclude. Thanks for watching.